Welcome in, everybody.
Good
Really,
morning.
really excited to have you here. But like I said, Helene, good morning. Hope you're doing well. And
Yeah,
another exciting day in the markets.
absolutely. Absolutely. And I know typically we do a market overview and then we jump into our trades, but we have a little bit different format today.
Now switch it up, huh?
Yeah, exactly. We're going to start with me actually I'm going to go over my trade of the day. And Blaine's going to go over his trade, and then Blaine's going to wrap it up with a market overview. Busy day here. So after I go over my trade, I'm going to hop off and let Blaine take it away. But for right now, let me go ahead and share my screen and we'll jump in.
Yeah, let's go ahead. And Helene, I think, I believe you mentioned to me that you were going to do a quick recap
Oh,
regarding your trade from
yes,
last week, right? On
absolutely.
Wednesday you had spotted that great looking opportunity, for Palantir. Obviously, the stock was headed into earnings. They, were set to report, yesterday after the, closing bell. And I was a little uncertain of that. I always get a little nervous trading right into earnings because I mean, it's really just a 50-50 coin toss, about what the stock's reaction is going to be. I mean, they had a huge run up into it. Options market was pricing in a huge move, but it looks like you nailed this trade. So if you want to go ahead and tell the folks.
Thanks, Blaine. Yeah, let me go ahead, share my screen. Let me make sure everyone can see it okay. Can you see it, Blaine?
Looks like it's still popping up. Oh, there it is right there.
There it
I can see it
is.
now.
Okay. So last week I went with market favorite or crowd favorite, really Palantir. As you know, they're a major player in that AI industry, and they have been on a killer run this year. I mean, just a gorgeous technical bullish trend here. It's honestly one of the best charts in the market right now. And so, earnings seasons can be a volatile time, but I saw the trend. I love the trend. I knew they were going to earnings. I knew they had a lot of extra time value in their options because of that volatility. And so I decided to take advantage of that time value by doing a call option debit spread. Because call option debit spreads, they make their money off of the time value portion of options. And so I went with a really conservative spread, knowing that if Palantir were to disappoint, I would still have downside protection. I could still win on the trade. But if they were to actually, beat earnings, have a big breakout, they're still set to make money. So it really allowed me to get into a trade amongst the volatility, take advantage of that volatility too. And it paid off. Palantir had a great earnings report. As you can see, this huge move higher off of their earnings. And my spread that I had taken was the August 29th, 140, 145 strike spread. As you can see, I'm currently up 31%. So I'm going to go ahead and I'll set my limit order. You know what? It's a little bit below five. I think I want to set it a little bit higher. So I'm going to say 4.8, and I'm just gonna, or 4.85, I'm just gonna let it ride out. If it hits 485, then I'll exit out. But if not, I'll hold it another day. It's well above my break even. So I'm happy to just go ahead. If I can take the profit today, I will. But if not, I'm happy to hold it a little bit longer.
Yeah, no, that's incredible. Helene, it looks like you just at current market prices have about a 30% return on that trade in
Yes.
under a week's time.
Yeah.
So like I said, you absolutely nailed that trade. We saw the stock, like I mentioned, it had a huge run up into earnings. It
Mm-hmm.
was really, it was one of those situations where the stock was really kind of priced for perfection, headed into that report. And, you love to see a company deliver above and beyond all the expectations and really just knock the cover off the ball in their earnings report. That's exactly what Palantir did last night. They delivered their first ever quarter, posting $1 billion in revenue. It was huge news for them. And that's why the stock is up another 7% today.
Yep.
Really powering that trade. So great call on that one, Helene.
Thanks, Blaine. So let me go ahead and get into my trade of the day. And today I wanted to share with everybody Cloudflare Inc., symbol NET. So they are a cybersecurity stock, and as you can see, like most stocks in the stock market, they had a decline, earlier this year, leading into that April low, and off of that low, they started to just shoot higher. I mean, they had an incredible run from May to mid-June where they were trading consistently above the upper Keltner channels. This is
Hmm.
something that only occurs in the strongest of bull trends because that stock is overbought and it's continuing to push higher. After that run, they continued to have that bullish run. And as you can see, they've been consistently making higher highs and higher lows, as well as 52-week highs. And so those higher highs and higher lows, those come into play over the past month. You can see those lows getting higher, and then those highs as well getting higher, which is what we like to see when we're looking for stocks in these really powerful bull runs. Additionally, I have a couple of moving averages on the chart to confirm the buy signal. I like that my stock's trading above both the 35-day EMA, a shorter term trend confirmation, as well as a 200-day moving average, which is a longer term bullish trend confirmation. Ideally, also you want to see that 35-day EMA trading above the 200-day moving average. So looking at the chart right now, we can see that yes, Cloudflare is trading above both of those moving averages, and the 35-day is above the 200-day as well. So this confirms our buy signal and the long-term and or shorter-term bullish trend for the stock. Finally, we look at the Keltner channels to time our entry point. We want the stock to be trading below the upper Keltner channel, meaning that the stock is not currently overbought. As we can see, looking at Cloudflare, it's currently trading below that upper channel. It's trading at 206.24. The upper channel is 213.05, so well within the Keltner channels. And I am looking to play this with a debit spread. Debit spreads, as I said, they make money off the time value portion of options, and they provide us with downside protection, meaning that the stock doesn't have to go straight up in order for me to make money. It could stay flat or even decline from here, and I could still be making money on the position. It's one of our favorite strategies here at our team, and so looking at the spread for today, I'm looking at the September 19th, 175, 180 strike call option spread. The cost is, oh, it just popped higher. I had it trading around 410. I'm going to go ahead. I'm going to put a limit order. I'd like to be in ideally no higher than 420 on this position. That gives me around a 20-ish% profit potential on the trade. So it might pop back down during the day, but I'll go ahead and yeah, as you can see, it's actually down to 420 again.
It's right there now. Yep.
418. Okay, well, I might as well make my limit order 415, get in at a better price, more profit potential, and I'll go ahead and place that trade, and I'll see you later on if it gets filled. Oh,
There you go. Just got filled right there live. How about that?
I love it.
Love to see it. Well, another great looking trade there, Helene. With net, you could look in the stock chart. It looked like the stock had been, kind of consolidating, just barely grinding out to new highs kind of over the past month.
Yeah.
But in the past roughly week of trading, it looks like definitely a reacceleration in the share price, setting new all-time highs, including just earlier today. You can see the stock broke out, set a new intraday all-time high. Yesterday set a new closing all-time high. So, great looking chart there, even better looking trade. And, I like the couple debit spreads you shared there. May even have another one for the folks here in just a minute, but great looking trade there, Helene.
Thanks, Blane, and I appreciate it. I do have to run today, busy day in the market, but I'm gonna let you take it away. Thanks for letting me join. I'm so glad I could be here with you guys today, but Blane, go ahead and take it from here.
Yep, I'll go ahead and take over, Helene. I'll catch up with you later, but great trade. So folks, I'm going to go ahead and take over the share here now myself because I actually have another trade to share with you all here today. And so kind of in the same vein, we have been talking a lot lately, about, in this market, starting to get into some tougher seasonality, a little bit more choppy trading that we've seen, really start to develop in the past couple of days. It's really, really important, at least from our perspective, to focus in on, those areas in the market, whether it's, sector focused, industry focused, or even just down to the granular single stock level, the areas of the market that are still displaying great relative strength compared to the market. And that's how I found this trade for today. So this is going to be for Meta Platforms, ticker is META. This company's already reported earnings. They delivered an absolute blowout quarter, led to a huge gap up in the stock. You can see it in the price chart right here. And we've had a little bit of follow through afterwards. We saw the stock set a new all-time closing high just yesterday. It's still trading right in that range that it traded up to. Hasn't gone back down, tried to close that gap or anything post earnings. So, really liking the chart, set up with that one. We do have some great trend lines showing up here for the stock as well. So we can see our red line right here. So our 21-day EMA is trading above our green line. It has been for quite some time now. You can see when the crossover initially happened back in early May. So that's when we had that buy signal first initiate, right as the stock was, breaking out and accelerating off of those mid-April lows. You can see the stock traded up, had a really nice rally higher, kind of chopped around for most of July until the stock reported earnings. I think investors were probably waiting for that report to kind of see how things went after the big move. And you can see they clearly delivered exactly what the market was hoping for, had that big gap up. And now we have both of our EMAs starting to slope back up again too, and actually getting a little bit of a widening out between the two of them. So that is a very bullish trend line buy signal there for Meta. Additionally, of course, the share price is trading well above both of those EMAs as well. So that's an additional technical buy signal there. Now, looking at this chart, we also have our Keltner channels overlaid. And so those are represented by our blue line. So here, this blue line is our upper band. This line down here is our lower band. Of course, we have our dotted line in the middle. That's our middle Keltner channel. So you can see, even though the stock opened today above the upper channel, it's come in a little bit today during today's trading action. So you can see the stock's trading just a touch below 770 per share. So that means the stock is currently not trading, in short-term overbought territory. So that's offering an attractive entry point for trade opportunity for this stock in the incredible bullish run. So the trade I actually found for today, again, similar to Helene, is going to be a call option debit spread. It is going to be an in-the-money call option debit spread, but it's going to differ slightly from what she was doing, where she talked about her Palantir trade from last week and then the Cloudflare trade from this week that she just found. This trade, again, it's going to be an in-the-money call option debit spread, but hers were, fairly, pretty deep in the money. This trade's going to be a little more aggressively positioned. It's going to be a little closer to the money. Again, you can see the stock's currently trading at 766 per share. So you can see that is, currently where the current share price is. I'm going to be a little closer to the money percentage-wise with my trade. So it may behave a little more, like a directional trade. Of course, it's still going to have the characteristics of a debit spread because that is what the trade is, but it's going to, be a little bit more aggressively positioned, a little closer to the money. So, with that, we're, expecting, using this August 29th, we'll have a little bit higher profit potential than what we would if we went use the same expiration, went with a really deep in the money spread. But again, this is the trade that I found for today. I'm looking to buy to open the 725 and also sell to open the 730. You can see it's currently, it's bouncing all around. It's roughly 3.9 points per, one contract of this trade. And I'm actually going to go ahead and place this one live here too. I'm just going to set my order at 3.9. As I said, it's been kind of bouncing all over, but that's where I'm going to set it. And of course, I'm going to use a limit order. So I'm going to set my limit at 3.9 points. So I'm going to go ahead, send that order off, and we'll see if we can get it filled here. But that was my trade for today. I'll watch it. If I can't get filled, I was very close to that that range right there. So I might have to bump it up, 5 cents, but we'll just see on that. But that was my trade for today. But I did want to hop into some market overview and analysis after looking at those two trades there. So, excuse me. So one thing, as I mentioned, we have been really watching this in the past couple of weeks. Of course, last week we saw, a pretty decisively negative week for stocks as we had a pretty significant pullback. There was a lot of noise in the markets last week, a lot of, new data points, a lot of big earnings, and all of which were market moving. Now, of course, on Friday, we got the jobs report that really spooked investors because of some of the numbers in that. And what all that led to, what the charts are telling me, there was a pretty significant decline in breadth across the board, whether you're talking about, some of the weaker sectors, that are, part of the S&P 500, some of those stocks, or if you're specifically looking at the small caps. Some of these things, that are, more cyclical, maybe a little lower quality, all started to rally, just really within the past couple months, the last month or two, really started trying to catch up and have a nice catch-up performance, seeing that breadth expand. Last week, that narrative kind of fell apart a little bit for some of those kind of lagging sectors that were trying to catch up. And that's what's indicated in this right here. So this is looking, this top chart's just the S&P 500, but specifically what we're looking at here is the advanced decline line for specifically the S&P 500 stocks. So you can see this right here is what we're looking at. This is this past week, and you can see the very sharp downtrend that we had just in the past week. We've recovered a little bit. We've recovered some of those losses on the advanced decline line from last week, but this is one of my favorite breadth indicators to see how wide the breadth and how how broad the performance is across the market and across the index. And when you see this line sloping down, that is, that's a very clear signal of narrowing, declining breadth. Doesn't mean the market can't rally, but it generally is very helpful, to have that expanding breadth, in the market. So that's what we saw last week. That's a clear sign of that. And one further sign I want to point out right here, so you're probably all pretty familiar with the spider ETFs, so you see the XLK, the XLC, XLF, things like that. So the spider sector ETFs. And so what this is right here, this is actually a heat map that they provide on their website, looking at each one of those individual S&P 500 spider ETFs and all the stocks that make them up. So of course, the biggest square here, this is XLK. You can see each individual one. So XLY, XLC. So these are all the different sector spider ETFs. And what I have this set, so you can set it to different increments to look at right here, just to see each sector's performance. This is a really easy way to go and look and see which sectors are performing right now over each of these different intervals, and what's working, what's not. Now, you can see, looking at the individual, since they have it broken out to the individual stocks, it obscures it just a little bit, but you can look under each ticker and see, I have it set to 1 month. You can see the actual performance of the sector ETF over the past month if you just look individually at each chart. And so you can see that over the past month, we've started to have a pretty significant divergence in what is working and what's not, specifically following last week, after we had that real breakdown in breadth and some of the things that we're trying to catch up and start having some acceleration. But the rally and some of those kind of failed last week. So you see the consumer discretionary is down in the month, healthcare down about 2% on the month, financials now down about 2.5% on the month, materials having a rough time, staples having a rough time, energy again down about 2%. So you can see some of these other sectors, again, more cyclical, some of those types of areas, they are starting to run into a little bit of trouble performance-wise right now. So why we like to look at this is to not only determine what's not working, but more importantly, of course, what is working, right? And so we can see that tech is actually up. The sector as a whole is up about 2% over the past month. We can see XLI is up a little over 1%. We can see that comm services is positive. That's an interesting sector because you think comm services, you think of the T-Mobiles, the AT&Ts of the world, but it also includes Google and Meta, which have had fantastic performance and are by far the largest weighted stocks in there. So, but again, you can still see the performance for that sector is up over the past month. And then a surprising leader in performance over the past month is our utility sector, XLU. They're actually up almost 7% over the past month. So that's really a standout right there. That obviously signals that they have the strongest relative strength as a sector right now. Across the market compared to any other sector right now, the utilities have the strongest relative strength compared to the market over the past month. So that's really interesting and noteworthy there, just to take note again of what is working and what the strongest sectors are. But having only 4 of the 11 SPDR spider sectors really working right now is just again another piece of evidence showing that narrowing breadth and narrowing participation in the market. And so, just wanted to highlight those things there for you, show you a couple key things that I track just to, kind of get a good read on those things of what the breadth is across the market. And of course, we can just wrap things up just with where the S&P is trading right now. This is, of course, an S&P 500 chart looking at roughly the past 6 to 7 months worth of trading. So you can see, of course, this is the past week's move right here. You can see, stocks really took it on the chin, really into latter part of last week, really on the back of that jobs report from Friday. They really sold off, dropped below the middle Keltner channel. Again, heading into that, Helene and I have been sharing that stocks were certainly overbought. There were a lot of technical indicators and signals saying on the charts that they had been overbought and had been overbought for, quite some time according to the charts. Again, they can oftentimes stocks can be in overbought territory and, run for quite a bit longer than you might anticipate. But nonetheless, we were pointing that out, saying that, stocks, at least at the index level, were certainly due and were ripe for a pullback and, just were in need of a catalyst to cause it to happen. That's exactly what we got last week. So you can see we got that pullback. This week, of course, we had a pretty positive day yesterday, finished near the highs of the day, got back up above 6,300. And, right now, I think we're just in kind of this, kind of chop consolidation sideways period. There's a couple different narratives in the market that are, trying to grapple with one another to, to see what ultimately wins out. So, investors are kind of, working, sorting through those things right now. Again, you had the, tougher seasonality according to history in there too. So, I think that's, kind of what we're in for right now is probably a little bit of a sideways consolidation market. At least for a couple of weeks while, we kind of grapple with some of these ideas, whether it's the, labor market or economy weakening, rate cuts, earnings, just so many different things that people have to weigh, right? But, that's what the charts are telling me. That's what you have to really lean into in these times when there's, all this different noise and headlines and, things that can be distracting, is, really we have to lean in, here, our team, we have to lean into the, price charts, see what the technicals are telling us. The long-term, medium-term trends, all those, they're still well intact. You can see that on the chart right here. The 50-day is still above our 200-day. Stocks at the index level are still above both of those. So, our uptrends are still confirmed. We were certainly due for a pullback. That's what's very clearly playing out on the charts right here. We do have some support levels, below stocks right now that will certainly come into play, should we, continue to trade a bit lower. The first one would be that rising 50-day moving average that's, at roughly 6150 right now. That's a very key support level, should we go down and retest those lows from Friday. Following that, we have further support coming in, roughly at the 6100, 6050 level. Should again, we extend that pullback, for the next couple of weeks. But, I at this point, I don't think there's been a huge catalyst to drive up, significant correction or anything like that. I think this is just, typical garden variety pullback within the context of a bull market. At this point, I think that's all, the data and everything really warrants at this point. Just a bit of a breather, allow stocks to cool off, and then resume the uptrend higher over the next month or so. So that's what we're seeing in the charts right now. That's what they're telling us. But folks, that's just about everything I had for today. So let's see if I see a couple questions. I see Holland, you were asking debit. So the trades that we highlighted today, Holland, they were debit spreads, both of them, both the call option debit spread for net that that Helene did, and then the trade for Meta that I did was also a call option debit spread. Let's see. You're asking which date did Helene choose? Holland, I do not remember. I apologize, but I'll tell you what, Holland, I think I want to say it was the September 19th. It should have been the September 19th expiration that she was using. But we will be, of course, these sessions, they're always recorded. And, we send these sessions out later in the day with the replay. So if you want to be absolutely sure, to see, if you're going to track along with one of those trades, you can always watch the replay and see exactly which expiration she was using on that once we get the replay out here in a couple hours. So just wanted to point that out. Okay, I see Helene. She actually just posted in the chat. She just said that it was September 19th was the expiration she used, and specifically she bought the 175 and sold the 180 strike call. So appreciate that, Helene. Thank you for throwing that in the chat there for us. I know you're still listening along in the background, but folks, it looks like that's all the questions in the chat. So with that, that's all we had for today, everybody. I really appreciate you all being here live with Helene and I for today's Trade of the Day Live. We do have another session coming up on Thursday, same time, same place. I will be here Thursday breaking it down. There'll probably be a lot of market action between now and then. So I need to go ahead and hop back into it. Things are moving today. They're active. So I have to go ahead and hop back in there and get on top of what's moving. But we'll be back here on Thursday. Like I said, we'll be really excited to have you all back. Hope you all have a fantastic week, and we'll see you here in just a couple days. Take care, everybody.